welcome. This panel is about how much interaction is really necessary with your investors, and we got a distinguished panel of syndicators who have successfully raised money through crowdfunding, and it should be pretty interesting. I know it's kind of getting toward the end of the conference and it's thinned out, but I think that this panel is what it's all about. There is no crowdfunding without a crowd, and we'll dig into it. Why don't we start here and we'll go over, tell us a little bit about who you are, what your company does, and maybe a little bit about your crowdfunding success so far, and then we'll dig into the topic of the panel.
I'm Dewayne Lener. I'm with ASCENERGY. I'm the Director of New Business Development. We're based out of Nevada, but we're drilling oil and natural gas wells in the state of Texas. Unlike traditional shale producers, which you've heard in the news are taking quite a hit, we do not drill in shale. We drill in chalk or sandstone formations. Thus, we have a very low cost point of production. So this allows us, even in the lower pricing of today, to have a very profitable return for investors. We're unique in that we provide the royalty ownership to investors. So this allows us to do a 1031 real estate exchange, which many people were not familiar with that we could do. So this crowdfunding, we've done a crowdfunding raise successfully. So we're on multiple crowdfunding sites that allows us to have greater exposure and reach a larger audience to show them the uniqueness of our offering. So this has been a tremendous learning experience for us as we've tried to learn how different sites work and then subsequently how their investor base reacts.
All right, great. I got a really quick question. So you're on multiple sites?
Yes.
And they're okay with that?
Yes, they are.
And then is it debt or equity?
It is equity.
Okay. And what's the total raise, if I may?
The total raise is $20 million.
Okay.
All right. So we're spreading it out between sites.
Oh, okay. I get it. That makes sense. All right. Aaron?
Morning. I'm Aaron Mesmer with Block Funds, and we are an owner-operator, developer. We're based in Kansas City, Missouri. We've got properties kind of in a Midwest and Sun Belt from Chicago to Atlanta to Phoenix. We have 20 million square feet of commercial space in office, retail, and industrial. We also have about 2,500 multifamily apartment units. We have been a syndicator throughout the company's 70-year history. For us, the crowdfunding space is sort of an online mechanism to do what we've done for a long time, which is put together private equity groups of high net worth individuals to go buy good real estate. We're interested in the space. We're sort of excited to be able to automate a lot of those functions that we've been doing manually for a long time. And from our perspective, we've done two raises through Realty Mobile. We paired their equity with equity that we raised from our other investors in two separate transactions, and that was in the summer of 2013. So,
ready to do another?
We're interested in doing more crowdfunding. We're still getting to that place where, and this is part of probably our conversation today, not knowing who our investors are going to be in those deals is something that we're still thinking a lot about.
Oh, okay. Yeah, that's interesting.
Yeah.
We'll dig deeper into that. So what's the total amount of raises or raising?
We raised about $1 million in Realty Mobile
for each or
no,
total?
Combined on those two offerings. Yeah.
All right, next.
David Manheimer, principal at Brooklyn Standard Properties. We do multifamily and mixed-use rehab in Brooklyn and Lower Manhattan. We've done 3 crowdfunding deals to date, 2 equity deals and 1 debt deal, all through Fundrise. And I'm pretty confident in saying that there will be more for us in the horizon on that.
Nice. Do you have any active ready to go, or?
Maybe 60 days or 30 days out.
Nice.
My name is Cuha. I'm a co-founder and managing director of Dominion Partners in Newport Beach, California. We're a owner, operator, developer. Our primary model currently is single-family residence flip, but it's national. So we're in Washington, California, Nevada, Florida, entering Utah right now. We've crowdfunded about 5 deals through Realty Shares, equity and debt. They range from as high as $1 million to as low as $135,000.
Okay.
We've got a few of them coming out, a couple of them going in.
Did you say all single family or?
All single family,
Okay, nice. And was the $1 million one one property or was it a pool?
one property.
Oh, okay, nice. All right, well, my name's Christopher Crippen. I've been in crowdfunding. I stumbled across it in 2010 at a conference, and I got it immediately. And I manage a small fund now. Most recently, I just left a publicly traded REIT, and I've been in real estate about 25 years. And crowdfunding seems like it was tailor-made for debt, you know what I mean, especially real estate debt. Early Shares, based out of Miami, where I'm from, is a crowdfunding portal. They were one of the initial ones, and they were focused on business. And you know, they had small, moderate success, and then when they opened it to real estate, you see the curve, and it's just a straight hockey puck. I believe that investors get real estate as far as when it comes to crowdfunding. They like something tangible, something that they have an asset or collateral behind. Anyways, let me take a survey of the audience really fast. Do we have attorneys in here? Do we have broker-dealers, securities? Do we have real estate agents? Or real estate syndicators? Who do we have? Attorneys? Alright, doesn't matter. We'll get into it anyways. Alright, how much interaction do you have with the investors? Well, if you ask me, crowdfunding is all about interacting, right? It's the initial raise or the initial syndication that you do through a crowdfunding portal is really your introduction to the portal and its investors, and the real success with crowdfunding comes in the follow-on funding, right? So if you have a good interaction with your investors, you return a good return, and you do what you say you're going to do, it's the follow-on investing that'll really make you successful. I mean, ideally, what you'd want to do is get in good with a portal or several portals or even self-host, and then cultivate a list of accredited investors or investors when Title III comes out, if you're a funding portal. But and then once you get them, you'll know what they look, you'll know what what they're interested in funding, and then you can source deals for the group of investors that you've cultivated. You know, Title II is the lifting of the ban of solicitation, so it really allows you to raise money through an alternative financing with the modern social media, CRM kind of technology. So let's get into it. So what kind of interactions did you have with your investors when you were raising your funds? Did you have, so really fast just to set the stage, and I don't want to take up too much time, is that, so there are two different ways with Title II crowdfunding, which is really the only thing that's legal right now. They lifted the ban on solicitation, and you can self-host your own 506c. So if I wanted to do a 506c, I could host it on my own site, and I wouldn't have to go through a portal. The other way is to go through a portal, and you go through the portal, and they have their investors. So, what kind of interaction did you do? You went through a portal, so did you have interaction with your investors, or were they firewalled off from you? And maybe tell us your experience.
The crowdfunding experience that we're having is our investors then, through the crowdfunding portal, they reach out to us. They express an interest and say, please contact us and let's talk. Okay.
And then Aaron, you had a little bit different experience with, go ahead, why don't you tell us about how you met the investors or?
Sure. In our experience, in our crowdfunding raise, we did ours through Realty Mogul, and they do a very highly managed investor relations on their side. And so from our perspective, we sent them our initial underwriting, we sent them our perspectives on the deals themselves. They go through, they underwrite those. They actually underwrote our operating documents as well at the same time. And once they were comfortable with us and with the transaction itself, they agreed to.
So they took it to the investors and you had nothing to do with it?
Yeah, that they would put it up on their site. And then the process going forward is they would answer questions based on the knowledge that they had. We had a one-time web hosting deal that they sponsored, that I was on, and it was live with the investors, so they could ask questions in real time.
Right.
And it's a little bit different. In our normal syndications, we're interacting directly with those investors. We're answering their questions. We have direct relationships with them. In this case, it's definitely something that's quite a bit more managed by them, and there's a luxury to that. They tend to consolidate the questions. That, if you have repeat questions from multiple investors, they can get that condensed down into one email for us to respond to in one way. So that was nice, but we have no interaction with those investors. They came in as a single member LLC, as a member of a larger entity, where they put in $600,000, we raised, $2 million.
Okay.
And we paired that, they were just a member of our group, like all the other members.
Oh, okay, they were
that entity. So we have no idea who they are. We don't know.
Let's let's dig into that in a second, but I'm interested in your guys' experience with yours. So did you have interaction with yours, or was it a wall up, like a firewall to their investors?
We've done both.
Okay.
For our 2 equity deals, and really the reason we went online was to meet people.
Right.
I mean, we obviously wanted to raise money, but we kind of went online the first time thinking if we're able to raise money, great. If we can't, it's not like the deal's going to fall apart because we went online and we couldn't get the money. And frankly, we went there because we went online to meet people that we wouldn't ever meet.
Did you build your database? Did you build an investor database through one of your raises?
I mean, technically, like the website builds the investor database, and this is not how they do it anymore.
Yep.
But it was basically Fundrise used to be a portal to facilitate an introduction between myself and the investors. And, and frankly, that's how we did it with the equity, and that's how we wanted to do it. And it's work, but if done right, I think it's very fruitful. We hit all our targets in all of our raises, and frankly, from the first raise to the second, we saw tons of repeat customers, and also, which is another reason why we went on, is we found, the cousin of the guy we spoke to for the first raise came to the second raise, and then the friend word of mouth in, Texas spread, and a couple people wanted to invest in our deals, and while, I'm born and raised in the city, and I probably have a higher likelihood of touching the people who invested in our deals online from New York or northern New Jersey or even, Connecticut. There's no way the guy who invested in our deal in Nebraska, I would ever have met him. So it's not a lot of money, but it's a beginning, and hopefully it turns into something.
And a business.
And and then when we did our debt deal, that was more of a firewall type situation where.
And who was that with?
Again with Fundrise, where they kind of provided us the funds. It was a mezz debt, and they went out and they kind of did their own thing. Granted, we made ourselves available to anybody that wanted questions answered, but to nowhere to the same extent. And frankly, it's definitely equity side. There weren't as many questions.
I think it's similar to Aaron's. We put together a pitch deck, on a video presentation, and they presented to their investors. It was completely firewalled off from us. We'll occasionally do a conference call with our investors, and then we provide feedback on a weekly or bi-weekly basis, and then answer questions when they have questions, but they're all filtered through Realty Shares.
Okay. Yeah. So there's a little bit of debate going on, or the first portals that came out is it was open. So you host a portal, or you put your offering on the portal, and then they work with you to introduce you to investors, and you all kind of crowdfund together. Well, what they found out is that, some of the nefarious investors or syndicators would circumvent the portal. So now what they've done, and as these portals have become successful and started raising money for their companies, they will fund the offering and then crowdfund their interest afterward, and fund off or firewall off their investors to, I would assume, to somewhat protect themselves. So how do you guys feel about that, by the way? I mean, it's a totally different experience than raising it on your own, because when you raise an offering on your own, it's you start a conversation with an investor and hopefully have a long business relationship with him. So how do you feel about that? I know. Well, really fast, let me clarify. There are 2 different types of portals. One where they'll raise the money for you, and one where they'll just basically host it and advertise it. They don't have anything to do with the crowd raise, right? And that was your portal.
Right.
So what do you guys think about the way the industry is moving, where they're moving more and more toward, anonymous investing in your offerings?
I think it's a double-edged sword. I think
so
at
too.
one point they're providing service and they're protecting their investor database, but also we're put in a position where we don't have to, maybe coddle investors and provide constant investor feedback. We have some of our normal investors that require constant monitoring and constant touching, and we don't have that when we use crowdfunding.
Right.
I think the biggest difference in what you just said to me as a sponsor is they're coming to me with that check, and I know it's going to close, and I have it right now. And one of the reasons, again, we funded a couple of these 2 years ago, and we haven't gone back to the well yet, is because to go through the process of raising capital on a portal is time intensive, and it takes a relationship, and it takes a setup, and there's not enough money that they can promise me they're going to show up with that confidence to make it work. And by the time I have a deal, I usually have 30 to 60 days to close that transaction. And so the idea that they have a source of funds, they have the capital, they have it ready to go, they can put it into the transaction, and they can syndicate it after the fact is attractive in the respect that I'm not worried about them leaving me at the altar as a sponsor. At the same time, though, like you said, it opens up that question about who is in my deal, and you know, am I comfortable having people I don't know or don't have a relationship or haven't worked to build a relationship with?
More on transactional funding and developing a pipeline of investors.
Right.
I'm not super happy with it.
Really? Yeah.
I don't, well, first of all, like I said before, we went online to meet people, so I'm not in the business of just meeting someone that works at the crowdfunding platform.
Did you know that before? Or did it, you know, I know that you had one experience where it sounds like it was open.
It changed over time, like you mentioned.
Oh, okay.
But I
they're
think
a great portal.
even more so, the thing that I don't like about it the most is that this isn't against any portal, I think they all do a great job. I don't think they're in the business of representing me and my company and what we do. So if I don't get to touch my investor comes back with a question and the person there isn't equipped to answer it, like I don't like this secondary kind of someone asks someone a question who asks this person who finally gets to me over email.
Yeah, well that's a good
and like we're not a big enough company where, you know, like I like to make sure every one of our investors is well thought of and you know, takes the time to be answered as opposed to, we're not doing, you know, $100 million raises where we don't have the time for the guy to pay 5K. So I like touching people. I like, well, that came out weird, but I like being able to speak for myself. And it's not to say that the crowdfunder doesn't do a good job of it for me, but I just don't think that that's where they're focused, rightly so. So I like to speak for myself.
Dewayne, what do you think?
We're in the position where we like to talk to our investors. We're not in a business where the real estate kind of sells itself.
Right.
We're in the real estate business. We touch the dirt a whole lot more than people in real estate do. But we build and invert our apartments into the ground. So it's where we have to do a lot of communicating. And we do create those personal relationships and that personal trust.
Well, you know, I personally, I understand the portal's reason for doing so, but I think the best salesperson is the actual syndicator who's putting the deal together. Well, in most cases it is, right? And I think that they're missing out on that. Anyways, let me tell you, so there's more than, in the crowdfunding space, what I like about it is that when it first started, you know, the first conference I went to was in 2010, and it was a bunch of weirdos looking for funding for algae farms or something like that. And it's really kind of it's kind of grown into the space that it is now. But the interesting thing is to see how the creatives have adapted crowdfunding to do some innovative capital raises. Let me give you an example. Realty Mogul did the Hard Rock Cafe, Palm Springs. And what they did is they only raised about 1.5%